All right. Hello, everybody. Welcome back to the channel. We are back on another episode of Tech Bros. Excited to be here with Tanner and Roy. Tanner, how you doing?
Doing awesome, man. Today's a good day. Everything seems to be up. Everything in my portfolio seems to be up. So happy day.
Roy, how you doing?
Yeah, same. The portfolio continues to be at or near an all-time high. Markets are fun, lots of news, and it's a Monday. What's not to love? Actually, real quick, before I got in the markets, Mondays were like, oh, it's Monday. Now it's like, yes, it's Monday. Do you guys feel like that at all?
It's a great point.
I never really hated Mondays, but yeah, it's a good time.
And Sunday night,
why have you never hated Mondays, Tanner?
I don't know. I've just never felt that feeling. It's just every day is, I don't know. They all feel the same. I never feel like there's a specific day that I hate. Yeah.
Dude, you really are Canadian, bro. Goodness gracious. Like,
what is that?
You never hated Monday, bro. Even when you were a kid, you had to get ready for school. Like, you didn't hate Mondays?
Okay. Yeah, maybe whenever I was a child, but I mean, like, for the last 10 plus years, I've never felt that.
You just had the most perfect job for the past 10 years where you never regretted waking up for a Monday morning. It's just been amazing.
No. I've definitely gone to work and not wanted to, but I felt that pressure on Tuesday, Wednesday, third. Like, I mean, I've never felt the added pressure on Mondays. But okay. I do.
Well, Roy and I can relate to 99% of the audience that never fully enjoyed Mondays, but I agree it's a good point, dude. Mondays are exciting now because you got the market open. So,
and Tech Bros Weekly, what's not to love?
And Tech Bros Weekly. That's right. Well, Tanner, you were a financial planner, so I guess you were excited to deal with finances on Mondays.
I was a financial advisor. Little different, but yeah.
Is there actually a different advisor?
A very, very big difference. Yeah.
Okay.
Yeah.
Well, you know best.
The financial planners need a couple more certificates that I didn't have.
All right. Well, we got a lot to talk about. Thank you all for being here. I think we'll get started with the biggest news of the day outside of the Nvidia stuff, because that is also pretty big. Hoodie is officially in the S&P 500. We hit 126 today, closed at about 124.50. Right now, 124.47. Tanner, I'll give it to you to start off. What does it feel like to be a champion of a company that is now one of the top 500 in the United States?
I mean, it feels good. I think the exciting part is it still feels very early. I don't think much of their success is, planning on slowing down. I think self-directed investing is extremely early. International investing is extremely early. And the new tools that are going to be built on blockchain, like what I think prediction markets or equities, these sort of things that Robinhood is going to be very deeply, investing in, is all extremely early. So we're looking at a growth company here that, although it's up a ton, is based on their real success that they're seeing and not just hype for the future. So yeah, feeling very confident, even though we have, average prices that are much lower than today. I mean, I'm sure, Amit, you probably bought more today. I wouldn't even be surprised.
Roy, your thoughts on S&P 500?
Yeah, it's amazing that they were officially invited, officially accepted today. We saw the resilience in the stock. Of course, it initially opened up down. Crypto is down a pretty good clip, and Robinhood's like, don't care. Just going to be up slightly, basically flat. But I'll take flat on a day like today when crypto is kind of falling. And it's remarkable too. And I think many here in our audience were Hood shareholders as you entered this year, or maybe early this year. It is the top performing the S&P 500. It's just barely been there, so it doesn't really count. But if you look at it from year to date gains, number 2 is Palantir, and it's been in there the full time, and it's just like surreal. Got both of those. I know you're in the same boat, Amit, but even to get one of those right, it's just amazing. And for it to feel like here, it's not cheap, but it doesn't feel like grossly, wildly expensive either.
Yeah, I agree. I think it's been pretty exciting. Obviously, all of us have been covering the journey for a very long time. It does feel like this story is truly just beginning, given all the verticals that we think Robin is getting into. And last week the discussion was how many different elements of growth can they tap into, especially when we have a little bit more of a bearish market, and Robin is going to need other metrics to be able to continue to show that growth. And I think we just have a lot of trust in Vlad and the team that they will continue to execute at that level, which is why it's very exciting. I mean, all of us are pretty much in agreement that this thing's going to $1 trillion. We don't know when, but right now it's at 100 billion. So you got articles like this on Seeking Alpha that say it's the most grossly overvalued company. And like, I can understand how there's some perspectives on its overvaluation, but then you also look at the growth, you look at the fundamentals, you look at their buybacks, you look at their trajectory, and you realize people are paying a premium for a generational company, which is why I think Hood can continue holding on to this momentum.
It's not easy to put out products at the speed that Robinhood has been putting them out at. And I mean, there's been other companies that have, but then you look at the quality of those products that they're putting out and they look slapped together. They're not great. I mean, the quality that Robinhood needs to aspire to before they actually put out their products is extremely high. And so the fact that they can put out those products and be market leading is just phenomenal.
Yeah, that's the thing, is a lot of times when they launch a product, a competitor will pipe up and say, "Oh, we've had that for 8 years." But then you actually look at what they have, and it's like, me making a beef Wellington at home and then competing with Gordon Ramsay. And it's like, he's going to win, he's going to crush me. And people might even look at that and be like, is this even the same product? Even with the same ingredients.
Yeah. I agree. It's pretty cool, dude. It is pretty freaking cool. And I can only imagine what Vlad and the employees and everyone else inside the company feels, because S&P 500 is not easy. It's only been 4 years, too. Like, it's not supposed to happen 4 years into being public unless you really prove you deserve it. And Palantir, Robinhood, these companies have proved it. So exciting stuff. In terms of actual Hood news, I don't think there's anything that crazy that's happened over the past week. Do you guys have anything specific?
Was Hood Ventures this week?
It was last week, but we didn't get to touch on it too much. Actually, I think we did.
Yeah, I think we might have actually.
Very
no,
weird.
dude, I just want to talk about Nvidia.
Okay, we can get straight into Nvidia. Okay, so I don't think there's any more Hood news. Yeah.
Other than spreads are now a thing on the predictions platform. That's probably the biggest piece of news, which for most people you don't care, but that predictions market looks like pretty close to $100 million annual run rate. Now, right now, of course, there's a confluence of a lot of sports at the same time, including some of the bigger bets, the NFL and college football as well. But yeah, that's an amazing, like, it's not like the most massive revenue source ever, but it's amazing from nothing a year ago. So yeah, Juan is keeping track of it. Follow this guy.
Yeah, shout out to him.
He's doing this all by hand, going in, looking at each of these. They change, people close out positions real time. It's even harder with the spread. And so what he gives are very conservative figures, which don't look conservative.
Yeah, shout out to Juan. There's his Twitter right there. So there are spreads now that you can trade, and then he's keeping track of the actual contracts themselves. The other piece of news here that's really important is Kalshi has moved into #1 in the United States of America for prediction market share. They now have 62% of the market. They have surpassed Kalshi, which is really important. And I think part of the reason they've done that is because
they've surpassed Polymarket.
Oh, sorry, they've surpassed Polymarket. Yeah. And part of the reason probably is because they have Robinhood's distribution.
In both Kalshi and Robinhood are also suing certain states and gaming industries as well, because they're like, hey, there's no reason why we should be restricted from your state. So instead of just playing defense, which there are lawsuits directed towards Polymarket and Kalshi, not so much the Robinhood here, but it's more Kalshi. They're going in the offensive too, so it'll be interesting to see where that takes them. But interesting times.
The what was the other part that might have been? If it comes back to me, I'll say something. But there was a small piece I think that we might not have touched on that happened sometime last week
around prediction markets or Robinhood in general?
I think around prediction markets. I don't remember anymore. I apologize. Yeah.
Well, yeah, it looks like that product will continue to grow.
The retirement thing. Did we show that off? The
did.
midpoint of September?
No, we didn't, but we should.
Yeah, that was really exciting.
So they now have 22 billion AUC in the retirement product.
Which I think Roy pointed out, it's up 100% year over year. And that's from the end of Q3 of last time to the midpoint of September this time. I think it was September 18th, something like that.
Yeah. I mean, dude, that's also crazy because it's like I remember when I had the interview with Vlad back in March of 2024, this was 1.5 billion. So this was like not a big number, and it has completely become crazy. I remember they were celebrating. It went from like 300 million to 1.5 billion in like 9 months. Now they're at 22 billion. This is going to accelerate, and people's retirements are pretty sticky. A lot of it's just like dollar cost averaging into really good companies.
Yeah,
which will be a long time.
Very sticky customers. Highly likely to go gold. Highly likely to cross-sell into other products. It's phenomenal.
Yeah, and that 3% match is big. I'm already looking forward to the Roth money. It just like day one, boom, $7,000. Give me my free $240.
Yeah.
And Tanner, you're like, when can Robinhood get here so I can get that?
Yeah. I don't have any of it.
Dude, when they come to Canada, I think there's gonna be so many people that transfer out of whatever they're in, and they're gonna be so excited to get into Canada.
Yeah, I would definitely become a customer very quickly if they have the same product that you guys have.
Yeah,
I would go Robinhood Gold credit card immediately. I would do a lot of those types of things. So, but if it's just commission-free trading and stuff like this, I don't know if I would immediately jump from where I am because I'm already getting that, and I don't think UI alone is going to pull me away. But I do want better pricing. Pricing will change the game.
Okay, so before we move on to Nvidia, then last question here is my personal price target end of year was 120. We're obviously above that. I mean, what are you guys thinking? Kind of gut feeling end of year. Where do you think this bad boy ends up?
Maybe 130.
Yeah. I don't think too much higher from where it is today.
That's fair. I think 130, 135 is really fair. I mean, like really bullish 135. Now maybe it blows all of our expectations, but I think 130, 135 is pretty reasonable.
Yeah. And I'm perfectly happy with that. I don't think that because I have names that have higher expectations for the end of the year that I'm looking to chase 3-month gains. Like, I mean, I want to buy quality. This is a great position. I don't see myself ever selling it as it stands right now.
Yeah, and I mean, like, look, if S&P, so if Tom Lee's right about Bitcoin and Ethereum, we're probably closer to 170. I mean, if Bitcoin actually is at 200,000, Ethereum's at like 12,000. But if it's more tame, Bitcoin at like 130-ish, Ethereum maybe 5,500, then yeah, I think 130, 135 is not that crazy.
Yeah, that's I'm trying to like weigh those two things in my mind, like the risk of crypto winter versus the opportunity of a blow off the top moment, at least in Bitcoin and in Ethereum also playing the catch up. Of course, we're seeing the opposite so far, early part of this week, but yeah, it's not going to bug me if like Robinhood's trading at $100 a share at the end of the year. That's fine. 165, sure, great, that's awesome, even better. But when dividend, I mean, like 200 and something % gains year to date. I want my 5-cent dividend, and I'm going to be unhappy, and I'm going to repeat that shareholder question every time. No, I'm just kidding.
It's the best performing stock in the S&P 500 officially.
Can you imagine one of us asking when dividend, like because we had that opportunity? I'm not even actually. I'm going to take that back. I'm not even joking about that because I may not be invited the next time. So.
No, I think things can change very quickly, but I'm not going to make any strong assumptions on where crypto goes. The lucky thing is like you do get to see the monthly data on Robinhood. Yeah. And so far, although crypto is doing well, and like just because Bitcoin hits all-time highs does not mean that the volume traded on Robinhood hits all-time highs. And that's the sort of thing to differentiate is the not just where the Bitcoin or Ethereum is, but how much retail specifically is trading on it. There are a couple other things that I'm not taking into account. Like whenever we look at how much volumes to be traded, I'm taking into account 0 for Bitstamp. I'm taking in almost 0 for prediction markets. So like there's so much more to be gained that we're not really expecting. I don't even think Wall Street is looking into it. So we'll have to see, but I'd prefer to be more conservative than not. Yeah. I'll leave my more bullish stances for whenever we talk about Nvidia.
So real quick, before we get to Nvidia, I think we should acknowledge SoFi, which is a pick that Tanner and Roy have been screaming about for the past couple of years now. That one hit all-time highs today. Closed just under 30, but we did get above 30. I guess just real quick, and I know you guys will have a lot to talk about, and you guys did talk about it last night on your SoFi Weekly, but I mean, is this something that you buy into strength? Is this making a, I know I've asked this question again and again, but is this going to make a hood or Palantir type of move, or what is your level of conviction? I know both of you guys probably aren't selling, but would you double down at $30 on SoFi?
If I didn't have any SoFi position here, knowing what I know on the company, I would add like DCA style slowly. When you see a meteoric rise, even though there's some fundamental reasons for it, amazing quarter. They've done a lot of things right as a company, and macro is actually helping them instead of trying to kill them, which is really nice. That lines up very well. It gives them a nice environment basically to grow in. They're not going to, necessarily continue to accelerate as far as their year-over-year growth rate, but they've been growing the whole time. So I think there's plenty of upside as far as where they're at right now, $30 a share. It feels not overvalued, but a little bit heated, just because of, like, if you look at the RSI and just the general euphoria that's in the market. So you'll probably get a better opportunity at a lower level, but maybe not. That's why if I own none, I would DCA slowly here and look for an opportunity to go in heavier. I think that 45s are in play. That there's a
for this year, 45 this year?
By midsummer next year. Basically, for Anthony Noto and team, they have these PSUs that hit at $25, $35, and $45 tranches. It can hit any time, but they have to hold a weighted average on the stock price of that amount for 30 days. So that basically I'm saying between now and next June, I wouldn't quite put it at a coin flip, but I don't think it's too far away from that at trading at that amount, as long as macro doesn't fall to pieces for some reason. So yeah, that's any stock where you're looking at that and you're like, okay, there's a decent chance of a 50% upside from where we're at in the next year. I would be a buyer in that stock. I'm not giving financial advice. I'm just saying if I didn't own any, I would be DCAing. It's my second largest position, so I'm not selling any here, but I'm also not buying.
Okay, Tanner, can this pull a hood or give the people what they want to hear? What do you think?
Well, I don't know if I can give them what they want to hear, but I do think that we get 50% over the next 12 months, which if you're looking at that as an individual name, I think that's very great.
What, so 45? You have Roy's target?
Yeah. Okay. Well, he said mid-September. I think a little bit more conservatively over the next 4-quarter prints. But I mean, we could go a lot higher than that. I mean, I'm not ruling out of the question 65 or 75 over the next 4 quarters, but they need to prove results that we've never seen before. And I don't want to price that in necessarily because we've never seen it before,
But why not? Why not kind of go on the edge and kind of say, I think AWS of fintech will accelerate. I think we're going to get like 7-8 more rate cuts. I think operating margins will go up. Like at that point, they're going to have numbers very similar to
yeah, but that would just be for the thumbnail. Like I'm not.
No. I'm dead serious. I'm dead serious. Like, do you think they could get to the point where the numbers get so good? Or I guess what I'm saying is, what's holding you? If the numbers are as good as Hood, or even a Palantir, probably not the margins, but still, why wouldn't they get that type of multiple?
Because the numbers aren't as good as Hood. I mean,
well, what if they get as good as Hood?
Then I'll be so excited, but they're not. So like.
No, but you don't think that you can make the prediction that they could get as good as Hood by the end of next year, or you think that's impossible?
I think that they can. They play in 2 very different spaces. So the problem with SoFi is that they do manage a book of business, and although they've shown that they've been able to rotate out of those loans, I mean, like. Let's look at Robinhood's biggest space, Okay, whether that, like, pick options, for example, that might be the most saturated market that they have out of anything else. They probably own roughly about 6 to 7% of the entire options market in the markets that they operate in. SoFi's biggest product is probably personal loans. And they operate somewhere around 15% of the entire market. So they're so much more saturated in their largest markets than what we've seen for Robinhood. And yet Robinhood can still show growth of 100+% year over year with, incredibly high margins. So we've been able to see like 100+ rule of 40 from Robinhood. We are a long way away from seeing that from SoFi. If they do, that's great. But I'm not here to be I'm not calling a 350x bagger here. I'm not trying to be those types of guys. I'm just saying that if Anthony Noto can do what he hopes he can do, which is essentially get to 50 million members and 3 products per person by 2030, that's going to be incredible. And I do believe that they can do that.
But, okay, so would you? Here's a better question. This is for the chat as well. Would you rather buy SoFi at 30 or Hood at 125?
Probably SoFi at 30. SoFi at 30, I think.
I agree.
I think that this company is going to turn around. And I think Robinhood is everything that it is already. Like, I think that they are firing it on all cylinders, and the market knows it, everyone knows it, and they will continue to execute. SoFi is not in the S&P 500. It's hated by institutions. It's got high short interest. The Wall Street estimates are still putting up 55 cents for 2026, 70 cents for 2027, something like that. And I think really what we're going to see is somewhere closer to 68 or 70 cents in 2026 and probably $1 in 2027, somewhere around that line. So I think that they are going to beat and raise much more than Robinhood will over the next 2 years.
Yeah, and there's 2 looming threats to Robinhood, maybe 3 if you include regulation. Thank you, by the way, Son, for the $20 in a year, 2026, $80. I mean, if we're like in 2021 euphoria, yes, that could happen. Rate cuts help and everything. Like a sustained valuation, maybe you're looking at $50 a share.
But hold on, I'm interested that you guys keep saying that it would be euphoric for SoFi to get anywhere near 100 or 80. But why is Robinhood at 120 not euphoria then? Why is SoFi at those prices peak euphoria?
The growth.
Well, yeah, growth, but also risk, right? Yeah. So if the whole market blows up and everything stops for Robinhood, let's say, revenue growth goes into negatives, people escape the markets, that's fine. Robinhood is okay. Okay. If interest rates get hiked, worst scenario for SoFi, like banks blow up. But
interest rates are not hike. What are we talking about?
I'm aware, but I'm just saying the worst case for Robinhood is that their customers don't trade anymore and their business still survives. The worst case for SoFi is that, customers throw their keys on the table and they don't pay their mortgages back, and SoFi's loan business turns into a massive negative. And the thing with held for sale accounting or fair value accounting, as they currently hold it, is that they've already accounted for future growth. So this is where the bears get a little bit excited about the problems with SoFi, is that revenue is accounting for success in the future. So if they adjust their loan books negative, SoFi can have negative revenue. That's not normal.
That's a fair point.
Robinhood can't have negative revenue.
Right.
SoFi can.
Yeah. So the other thing too with Robinhood is versus SoFi, and we're not like comparing these because it's like one-for-one competitors or anything. They're great companies that do overlap in some ways. Friendly competition that we talked about, last week. Maybe a little bit less than like friendly, but largely they're going after the same like dinosaurs in different segments. But there's 2 looming threats to Hood's valuation right here, maybe 3. One, of course, we talked about before, as far as them, year over year, they're looking great in terms of revenue, but the revenue hasn't increased markedly over where it was 3 quarters ago. So the question is, can they accelerate that? I think that they can. There's a lot of drivers for that. but they may not be looking at, like 50% year-over-year growth or anything like that. The other, of course, is crypto winter. If crypto is pulling back right now, Bitcoin might lose 112. We'll see if it does or not. While it's going down, especially rapidly, there's people trading back and forth, and so Robinhood will do pretty good. But if it's a sustained pullback for a month or two, which is not unheard of, that's going to hurt, this quarter's revenue. It's going to make it harder for that comp. The other thing is there's a lot priced into Robinhood that hasn't necessarily delivered its value yet. As Robinhood enlarges its TAM with the predictions market, which we already talked about, it's doing very well. International expansion, the gold card, it's still the unit economics might end up not working out, especially if there's macroeconomic stuff. I'm not bearish on it by any means, but I'm just saying there's less certainty with what lies ahead for Robinhood over the near term versus SoFi. Now, if you're saying which one of these to invest in now and not look at and not touch for 10 years, I would pick Robinhood because I think it's a generational company. They ship with excellence. You don't care about crypto winters. You don't care about macro. You just pick the strongest company, the strongest competitor there. But I think over the short term, it's very clear SoFi's underlying business is accelerating, and they're at the phase where Noto is starting to reveal some of those cards, that we've been critical of before, or you and I have, on him holding those big, hairy, audacious goals close to the vest. He's showing those off a little bit more, and I think over the next year or maybe less, we'll see more of those. The market is already seeing SoFi as not a dead company, more just like it saw Robinhood eventually. I think there's more to play out in that narrative. And as rate cuts come and fall or hit, it's a bit of a drag on some aspects of Robinhood business. A bit, actually, I think it's probably a net positive, but it's a huge positive for SoFi with their form of business. And they're not capital constrained in anything that they do because of that loan platform business, which they can just launch more products off of that left and right. So they're incredibly well positioned over the next 2 years. And so, yeah, between the two, that would be my bet if I had to pick one in the next 2 years from right here.
And I do think that's the exciting thing about SoFi as well, is that maybe a lot of the like new revenue that might come about is still not even a function of their business today. Because I'm pretty sure anyone that looks into SoFi knows that their big, hairy, audacious goal is becoming a new payment rail, like really heavily getting into payments. And they currently don't even really exist in that space at all. So that I think is really exciting, but it's also hard to put any real price predictions or buy a company based on something that we haven't seen anything on. I wouldn't tell people back in 2020 or 2021 to 2023, hey, buy SoFi because of the loan platform business. We didn't even know it was a thing. So, but once it's here, it's a lot easier to purchase.
Yeah, that is a fair point. That is a fair point. All right, let's transition to Nvidia. Big story, Nvidia, $100 billion investment into OpenAI. Here's what Jensen had to say earlier today about the investment.
Step back for me. I mean, a few days, you're all over the place, literally, in a way that perhaps it wasn't before. Where do these kinds of investments fit in? How do you think about the value of the ecosystem to Nvidia?
The Intel partnership is about recognizing that accelerated computing and AI's day has arrived. Remember, general purpose computing was invented practically 60 years ago. And for the last 60 years, we've been following that basic blueprint, that basic architecture, to build the ecosystem, the computing ecosystem of the world. And so all of a sudden, accelerated computing's time has come, and we're fusing, if you will, the Intel architecture with the Nvidia architecture to bring them into the world of accelerated computing and AI. So that's what that partnership's about. This partnership, I mean, this is, monumental in size. There's never been an engineering project, a technical project of this complexity and this scale ever. And it really just says that AI was in the early adopter phase in the labs, and finally it's breaking out into just about every single industry, every single use case we can imagine. It is very soon where every single word, every single interaction, every single image, video that we experience on through computers will somehow have been reasoned through or referenced by or generated by AI. It's going to be touched by AI somehow. So all of our computing experiences throughout the day, everywhere in every industry, will be powered by AI. This is the first 10 gigawatts. It's surely, it sounds like an enormous undertaking, but there's no question that AI is transformational for every industry. But the important thing is the AI infrastructure will be everywhere, and it will power computing experiences for everyone every day. And it's going to be just everywhere.
All right. It was big news. I think we got to give as me and Roy have done this many times, but another public thank you to Tanner for getting us into this freaking stock. It's definitely.
Yes. And the thing I love the most about this, I think we talked about it here, but I know that we did for sure on FinTech Fridays. Tanner mentioned a number of times he would love to invest in OpenAI at this valuation. Now we're doing it. We're doing it through Nvidia.
Yeah, that's true.
That's awesome. Yeah.
We own a piece of OpenAI through Nvidia. There you go. We're in.
I appreciate you saying that, because I haven't I haven't made videos or separate things. Some people just judge my entire portfolio based on thumbnails. So like, all you talk about is SoFi. It's like, you actually have to watch the live streams. But yeah, no, I've been loving OpenAI. How can you not? I mean, look at the monthly actives. It's just insane. What are we at? 700 million now?
Weekly active, 700 million.
Sorry?
700 million are weekly, not even monthly.
Weekly actives. Yeah, there you go. Yeah, we're probably past 1 billion on monthlies.
So what was Tanner, when you saw this news, what was your raw reaction? And I mean,
bro, I called you. I was dancing around my room. I was so excited. We had a conversation the other week and we said, you know, Nvidia is making so much money. What do they even do with it? You know? Yeah. Well, why don't you take a page out of Microsoft or Google or App, like any of the large names, you create a venture arm and you buy the best companies in the world with it. Okay. And that's what they've done with CoreWeave, with Nebius, with OpenAI, with Intel. They are not only supplying the chips to the greatest companies in the world, but then they also are having a stake in the success of the partners that they're partnering with. You know, like, I think it's absolutely genius. There's a lot of commentary about whether this is a Ponzi scheme or some sort of endless circle of nonsense, whatever. I've got so much commentary to say about that. But overall, just very quickly, loved the partnership. So excited for what this means. But we also don't know how long this amortizes out for and how long it takes them to build 10 gigawatts worth of data centers for OpenAI.
Roy, your thoughts on this?
Can you throw up my screen here? Yeah, I thought this was great. So this guy solely had said, so let me get this right. Oracle says OpenAI committed $300 billion for cloud compute. So Oracle stock jumps 36%, best since 1992. Oracle runs on Nvidia GPUs, has to buy billions in chips from Nvidia. Nvidia just announced they're investing $100 billion in OpenAI. OpenAI uses that money to pay Oracle, who pays Nvidia, who invests in OpenAI.
It's literally the infinite money glitch, bro. It's amazing. Like, I think
it kind of is, but like this, I mean, this is how business works anyway. When you get to a certain size, there's not a lot that, like, individually, if you announce with one company, really moves the needle. OpenAI, you know, as far as private market, they're one of like 2, maybe 3 that can. Public companies, there's not many either. So yeah, no, this is huge. It's significant. It's a great use of Nvidia capital. It helps OpenAI tremendously. I think this is a good win-win just because they need. I think their stock is probably trading at a premium, which they can get, which is good for them. And it probably, there's upside here too. But rather than go more into debt or have a higher burn rate, they're like, hey, here's 100 billion in shares, and we in turn get the product that we need to be able to scale. Helps their business, helps them dominate the market. Good for Nvidia. It's just good all around. So awesome. What a company.
I don't know why no one's bringing this up. I think this greatly accelerates their burn rate. Like the 100 billion does not pay for 10 gigawatts worth of data centers.
No,
you know.
Well, I think over the short term it does. I think that they are seeing even more opportunity. Like the faster that they grow and build these data centers, the more the market that they can capture, the more that they can monetize. So, you know, those models out to 2030, I don't know if that's right, but over the next couple of years, you're absolutely right. There's a lot of unknowns here.
Models out to 2030.
As far as, I think that previously they projected that they would have a certain burn rate through 2030, and that they wouldn't be profitable until then. So what I'm saying is that might still be very much intact. It looks different year over year because of this. If they accelerate faster, there's a cost to that, but it helps them accelerate as a business and monetize faster too.
All I was stating is that according to Jensen Huang, a 1 gigawatt data AI factory or a gigawatt AI factory costs $50 to $60 billion. Okay. Of which the actual GPUs and the networking represent 35 billion of that 50 billion. So if it's a $60 billion thing, which would be, you're only buying one, it's more expensive, right? Then it would be 10% more for the GPUs as well. But let's imagine OpenAI, because they're buying 10 gigawatts worth, is much, much cheaper than a 1 gigawatt data center at a time, because they're wholesale purchasing gigawatt factories here. They went to the Costco of GPU sellers. But still, that's 35 billion per gigawatt. That's $350 billion. If you're getting the average price here from Jensen Huang, maybe it's 30 billion. That's $300 billion. And Nvidia said, hey, we'll give you 100 billion to help out. Remember, the gross margins on the GPUs of Nvidia are 75%, or will be 75%. Even if they take a reduced rate and are paying them 100 billion for, and it's not for free, they're getting shares, right? They're like, when did payment of equity not become legitimate? Like, I don't see how at all this is a Ponzi scheme. Nvidia is making a ton in cash, $250 billion essentially. They put 100 billion towards buying the fastest growing company in the world's history. And they set up quite a big customer. They're setting up their own customer for success. For which
what is your response to the people saying that customer is giving them all the money back to buy their product?
Sorry, say that one more time.
What is your response to the people that say it's a bubble because that same customer they're investing in is taking the money that they got from the investment and literally giving it right back to the investor via GPU?
That sound like, bro, I'm investing in SoFi and Robinhood, and they are not coming back and purchasing my products. I'm getting the short end of the stick. Nvidia's getting an even better. Like, imagine that. You go to a customer, you give them a ton of money, and then they come back to you and go, hey, I want more of what you got. Like, great, give me my money back. I'm still taking the equity. I still get the equity. The SoFi is not buying product from me. Wouldn't that be great? Like, wouldn't it be great if Nvidia, after I give them 50% of my portfolio, they use that to go, and by the way, it's secondary market, doesn't work that way. But let's say I invested in the IPO. They take my capital, come back to me and buy product from me. I mean, what's wrong with that?
I hope those are not the famous last words. What's wrong with that? I'm on your side, but I just hope, we're okay.
No, the other thing is that doesn't even make remote logical sense. That's even better. That you get to invest in a company, you benefit from their success, and also they're going to use that money to just come back to you and buy from you. That's what Microsoft did, right? They bought 50% at the time of OpenAI and said, hey, use this money to come back to us and get some credits. You think that Microsoft is thinking that this is a Ponzi scheme whenever they invest at $50 billion valuation? Now it's at $350 billion or even higher. Yeah. Where's the Ponzi scheme there? They gave them their Azure credits and they made 7x.
Also, real quick, if OpenAI uses those chips to make way more than what they paid for the chips, which theoretically they should be able to do, that's how the business model should play out. I mean, that's not a Ponzi. They're making an ROI on the product that they're buying, even if they're buying it from their biggest investor.
Yeah, the idea is that the tokens that you can generate from Nvidia's chips should make you 8x what you spend.
Yes.
So the other really cool thing of this for Nvidia is them doing this with OpenAI. If OpenAI was the only LLM, and it's not by any means, and there's many other players in the space, if they accelerate their CapEx, which they are, that means that their competition either has to say, okay, OpenAI won, we're going to go after a different niche. And some will do that over time. But a lot will say, you know what, we're going to buy more. We're going to accelerate faster. We're going to compete right there with them. That's really good for NVIDIA. And we have not even talked about the Intel news. They're just, thank you, Tanner.
We're not even talking about the Intel news. OpenAI is going to be $1 trillion company. This is my belief, just my opinion. Okay. Sam Altman's a little weird. I understand. You know who else is a weirdo? Mark Zuckerberg. Elon's a little bit of a weirdo. All those people up there are weirdos. Okay. The Sam Altman fits in just fine. Maybe he killed a guy. I don't know. No, I'm kidding.
That is wild, bro.
No, I'm just kidding. But
that one was wild. I'll give you that. That was pretty wild.
Now I'm never going to be able to meet him.
Yeah.
No, it's just a joke. It's just a joke. But that being said, I think that they are incredibly good. It's not just an LM. They are differentiating themselves. They're growing faster than most other companies in their space. They will be $1 trillion one day. I'm happy that Nvidia, honestly, I'm sad that they're not doing it all in one. They're not just giving them 100 billion. They're doing it 10 billion per gigawatt because Jensen wants to be even safer about this idea. But I wish they would just give them 100 billion, buy 30% or whatever of OpenAI, maybe 25% or whatever the valuation will be at. Which, by the way, there's so many unknowns that we don't even know here. What's the value? Are they getting a preferred rate here? Like, I'm over the moon. The fact that OpenAI is going to give Nvidia back that money is not any problems to me at all. Or, you know, the idea for Sam Altman and Greg, by the way, is that right now they're accepting $20 a month or $200 a month for these products. I think that they are really seeing a pathway to charging $2,000, $20,000 per month for these products in the future.
Yeah.
Not for the consumer products that we are looking at, but I mean full-on software developers that are going to replace human capital and replace it with silicon capital. Okay. And when that happens, Nvidia will be the largest human resources company we've ever seen. Silicon resources, and many of the employees at these companies will not actually have humans in numbers. And at what valuation do you put that on a business?
Okay, so then OpenAI is going to $1 trillion then, right? They're going public at $1 trillion. I mean, they have to.
I think that they do. And I think the more capital that they need to raise, the quicker that they will need to look to go public. This is the greatest pool of liquidity in, human history. That or Masayoshi-san, you get to pick.
Yeah, I mean, they're not having any problems right now in the private equity market, and we've talked a little bit about that in the past. But outside the top, one thing I wasn't aware of, maybe this conversation was 5 or 6 weeks ago, is outside of OpenAI, SpaceX, and a couple others, a lot of the pre-IPO companies, private equity companies, are having a lot of issues raising capital. It's all going towards these massive ones at the top, and there's only so much money. So,
when you mean a lot of companies, you mean like Stripe and Discord, I doubt, are included in
Stripe's fine. They don't need to raise. Discord probably, there's a lot of controversy right now. International coups and assassinations and stuff. It's like, okay, I don't know if they'll go public, but if it wasn't for that, they probably would. But a lot of things like the Brexes of the world that they could use some extra money, and some that are like AI startups, which need money, that are still a ways away from actually becoming public. They have a vested interest now, just because I believe I was reading up through June in the first half of the year that this was the lowest amount raised for private equity in 10 years. It's been a while. And that just blew me away. I'm like, it seems wrong, because we're hearing about these massive capital raises, but it's just concentrated in 1, 2, 3 names. It's kind of like the market in 2023 when Mag 7 did fantastic and the rest of the market just kind of sat there, outside of a few names where people are like, oh, it's all concentrated in one thing, great gains. But if you're not in those, it's just tough times. So,
yeah, I kind of think that's a good thing, though, right? Like Anthropic, OpenAI getting all the capital. I mean, they are the ones that are winning. They're not profitable yet, but they are producing the growth. So as long as they continue producing the growth, then hopefully, those are the startups that get funded. Well, what do you guys think about XAI in this race? Because Jensen's not signing $100 billion deal with Elon.
I don't know if I think Jensen would sign $100 billion deal with any company that wants to come to him at that level. With Anthropic, with XAI, I'm sure he's ready to sign across the board. That said, I don't know if XAI... the one concern that I have had here is, what are the large customers going to say about this deal about OpenAI?
Yeah.
How excited is Elon about this? But I don't know. I think XAI is still going to be a big player. Colossus 2, they're buying, 550,000 GB200s, GB300s. They're going to be a large customer of Nvidia, and it doesn't seem like any of them are really ready to slow down. I actually think they just got a new valuation, did they not? XAI, like 300 billion, something like that? 290 billion?
Elon said that was fake.
Okay.
No. But yeah, I mean, there's obviously a lot of money that's being thrown around here.
So I did find the article. It's this. You guys can look it up. Private equity fundraising slides as sector downturn deepens. And just real quick, here's that chart going back to probably 2012, 2011. Yeah, it's down significantly. So it's all concentrated in just a few names. Good for companies that happen to be brokerages that benefit from people IPOing. But yeah, I mean, like the Anthropics and the OpenAIs and the SpaceXs are gobbling a lot of it, and they need it. So ultimately, that's a really good thing for us because we've talked about the relative dearth of IPOs, especially going back to where we were during the during COVID times. It's down a lot more, especially than you would expect in the middle of massive deregulation as it relates to crypto and stablecoins. There's a lot of companies that benefit from that. Figure, of course, just IPO'd. Same with Gemini, but also in the middle of this massive AI wave, where there's a lot of private equity companies that would benefit from more capital raises that are not getting the attention of the market yet. So I think that this will increase over time. But yeah, Nvidia. I mean, like as far as XAI, I don't think Jensen would even blink an eye at that. He'll say, yeah, absolutely. But I think that probably Elon Musk doesn't want to give up any control, and so they're likely to not take that deal.
Is Nvidia the buy right now, or is Nebius, CoreWeave, Iren, Bitfarms, all these data center plays? Do you think that's the better risk reward from these levels?
For me, it's at Air Test Systems. It's up again, another 8%. Talked about it, I think, a little bit here. I've made a couple of videos and a few posts. But largely what they do is AEHR, yeah, perfect, is the burn-in test systems at the wafer level on gallium nitride, which is like they're the only ones that do it. It was a very difficult technical problem when you're able to solve something you're not even sure that's possible, and it worked. Doesn't mean that you'll be the only one that does it ever, but it's enough of a differentiation that's why they've gotten this massive premium. But in essence, this is like betting on the store that sells picks and shovels rather than the actual individual racers.
So you would rather buy Air Systems over Nvidia at these levels,
right? Well, I have a good chunk of Nvidia. So let me back up. Nvidia is an anchor stock for me. It in the best possible way, not like an anchor that drags it down like PayPal, but rather something that nothing is guaranteed in the market. But if there is any stock where I'd be like, okay, what's one stock that you bet that in the next 10 years is going to be at higher? Nvidia, give me that one, easy money. Like how much higher? That's speculative. I'm not expecting like 50% year-over-year returns or anything crazy like that, but a decent outperformance of the S&P 500, probably surprising a lot of people. Like we could see a CAGR around 30% for 5-10 years, and I wouldn't be shocked at all, even higher possibly. Versus, and it's already the largest public traded company in the world. Air Test Systems, there is more risk, but I think there's a lot more reward. But it's like these are polar opposites. It's a micro cap. It's just over $1 billion valuation versus 4 trillion something for Nvidia. So I wouldn't want my whole portfolio being Air Test Systems and names like that. I would not be able to sleep at night. I allocated 4%. It's about 8% of my portfolio now. Very happy with where it's at. I think that this is one that all-time high I think is pretty easy for it. Earnings are October 9th. This is over the next 2 years. I could see this trading in the triple digits pretty easily. And I think that's more upside than Nvidia. But again, there is more risk here too. And so, like, one thing I'm not going to do is sell any Nvidia shares and buy Airtest Systems. But if I was picking between the two and looking for a winner in the space, I think that's a clear one.
Tanner, are you buying more Nvidia, or are you trying to look to some of the benefits of this $100 billion deal?
Right now, I'm not sure. I haven't pulled the trigger on more Nvidia, but you know, it's by far the largest company that I have in my portfolio. And whenever I called you, I was like, man, I don't know. I feel like we're maybe a little shy on the investments that we've made in AI. And it's, you know, probably 75% of everything I own is some form of an AI play. Yet it feels like I'm underinvested. And right now I feel like I need to go so heavy into AI and blockchain. And those are the only two plays that I want to make. Everything else can go away. And I'm sure there's other great investments, but I don't know much about them. In terms of which of the smaller names outperform Nvidia, I just got to be honest, I haven't really looked too much into those individual names to know how, you know, each of those individual names, Bitfarm or IREN or TeraWolf or whatever, is differentiating themselves from one another. I don't look into them. And just mainly because I have such a stake in Nvidia as well. And like Roy said, it's the name I know best. It's such a clear winner. Those companies' success is my success in the end. So through Nvidia. So currently Nvidia, but I'm not buying it right now. I'm just holding it as my largest position.
What's the last price you bought Nvidia at?
Probably roughly around 150.
The same for me. Roy, is that kind of the same for you? Or
I think so. I think it might have been 140s, high 140s or low 150s. But yeah.
Okay, so none of us have really bought above 160 then. So buying into strength here at 183. I mean, it's not crazy, but obviously it is something we haven't done. I don't know, man. If this thing is 200 by the end of the year, which doesn't feel crazy, I do think I was talking to Steve today and he was like, it could be 250 by early next year. I'm like, bro, I don't know. That's like, I feel like we're stretching it.
I mean, it really should be. Like the multiple versus the amount of growth. If the AI market does continue to hold up a 50% growth rate, we're going to be looking back years from now and just being like, why did we drop that ball? Why were we touching SoFi? Why were we investing in anything else if the largest company in the world is growing faster than it?
And I did buy some at 174. It wasn't a huge order, but yeah.
But yeah.
Okay, so then the question is like, do we think it can keep growing that much? Like, I mean,
well, yeah, I'm curious. Like Tanner and Amit, like I threw out, possibly a 30% CAGR over like 5 to 10 years, which is insane. Like it doesn't sound insane relative to where Nvidia has been, but law of large numbers comes into play. Is that a crazy, or do you guys have like a higher?
I feel like they have to grow at least 30% next 5 years.
Yeah, I've got assumptions that are larger than that.
Yeah, dude, that's like my base assumption. That's not my bull assumption.
Yeah. Okay. Yeah. No, I think that's fair. And that's the funny thing about Jensen, right? Is like he makes these investments into OpenAI. He makes all these investments. I couldn't imagine, like, what I tried to explain on my live stream today is like, we are looking at the iceberg and we are not able to see under the water. Yeah. Jensen is walking through and seeing what Mark is working on, what Sundar is working on, what like all of these companies are working on. And that's why he's giving OpenAI $100 billion. He knows what's coming next. They're like if you listen to the last quarter earnings results, their sort of roadmap for purchases is unbelievable. They have such a vision of the amount of demand that these companies have. So the fact that he can continue to say that the AI market is having 50% CAGRs or revenue CAGR is because he sees it. He sees it in the orders. He knows what the purchase orders are going to be going forward. Like he understands it. I'm only looking at the surface and trying to make assumptions there. So that being said, I think that they are going to grow a ton. Lisa Su was just recently on a podcast where she said that we are 2 years into a 10-year build out. What? Like, how do you put this into, how do you put this on paper? If Meta is going to spend 600 billion or more, he said that was actually a shy comment whenever he made or said that to Trump. People brushed that off, and then he corrected and said, no, that's more of our like base case. There's a much longer roadmap than that, and they're happy to spend it because the risk is not being in first, second, or third place. The risk is falling behind, so they all have to do it.
Yeah, and going to your point that Jensen understands products before they come out. This is Dylan Patel today on a new podcast talking about Jensen's instinct when it comes to new products.
It's super awesome because, they failed multiple times in the beginning and they bet the whole company multiple times, right? Like Jensen's just crazy enough to bet the whole company, right? Like whether it was like certain chips ordering volume before he knew it even worked and it was like all the money he had left, or like ordering volumes for projects he had not won yet. Like I heard a rumor that, or not a rumor, but like a story from someone who's like a graybeard in the industry and I think would know, was like, yeah, no. Like Nvidia ordered the volume for the Xbox before Microsoft gave them the order. Look, Jensen, you're like so vibes, like driven and like very gut feel and like very visionary. And then Colette's, CFO, like she's amazing in her own right, but like, that those personalities clash. How do you work together? And he's like, I hate spreadsheets. I don't look at them. I just know, right? Like is his response. And it's like, of course, the best innovators in the world have really good gut instinct.
I mean, he probably knew that OpenAI was going to need more money, and that's why he got ready to do this deal with them.
Yeah, I mean they're just so well positioned, and the only reason why a lot of not in the comments necessarily here, but among retail and I think even among some institutions, but not many, with Nvidia over like base level 30-35% growth rate, is Nvidia's done better than that in the past. But if you were to go back in time and let's just skip over this, but we went to 2019 and we said, hey, Nvidia's going to be the largest company in the world, and it's going to do these CAGRs, you would be like, oh man, that's amazing, that's ridiculous growth. Like you would almost not believe it. But we've been spoiled by very recent success, and it's kind of like with Palantir and Robinhood too. Like it's gone up, and SoFi now tremendously. And so if next year our stocks are up only 40%, that's amazing. 40% is great. We're just spoiled recently.
Yeah, it looks like it is not slowing down. We got our boy Rango right here who does work at Broadcom saying, hey, just had my all hands meeting. This demand is not slowing down. And obviously he did point out that Hock Tan's compensation is all based on AI revenue. So
yeah,
I mean, if he doesn't get that AI revenue up, he's not going to get paid, which means you've got to have AI sales. And likely that means it's bullish for Nvidia as well.
Do you guys not use, I can't, it's a little leading, I guess. Do you guys use AI products often?
What type of question is that?
Yeah.
I was trying to phrase it in a way that I wasn't leading you, but I use them all the time.
You mean LLMs?
Yeah.
Yeah. Why didn't you just say, what do you mean AI products? So what other AI product out there is there besides an language model?
Optimus Bot, I guess. Full self-driving, maybe?
Bro, we use it I think like all of us in the chat probably use it every single day.
I know. I mean, there's 700 million weekly actives. I'm just curious if you guys are seeing some sort of slowdown in your usage. No. I mean, I'm not.
So I'll tell a quick anecdote. So this starting last year, halfway through the year, we pulled our daughter out. The school that she's at, middle school, was just absolutely terrible here in Houston. Elementary was great. So anyway, we've homeschooled before. This year, she goes into work with me 1.5 days per week, and all she does is just bring her book bags and everything. And those are, one day is a slower day. I can monitor her a little bit, check in with her. She'll ask questions, and if it's math, it's just like, nope, been too long on that sort of stuff. But like today, literally today, I was showing her, like she already uses ChatGPT and knows, and uses a lot of LLMs, some that I've not heard of. But I showed her because she was curious. She's like, "Are you using OpenAI?" And I was like, "Yeah, here's what I'm doing." And I showed her what project I was working on. I was like, here's what I'm working on here. And I'll ask it a question and I'll put this data over there and I'll ask it to, give me some alternatives. And here's what it's good for. And then here's where I use it here. And so just basically had a homeschooling session with her. I don't know, probably close to an hour where I showed her all the different things that I use it for, both, for the investment side, but also for what I do. And I also showed with her some things that I don't use it at all, for it all, where others in my field might. And I think it'd be a little bit sketchy or dangerous. But yeah, nevertheless, like that's so weird that like 2 years ago this didn't exist, and now I'm teaching my daughter homeschooling lessons. And real quick, had a meeting with my dissertation mentor last week, and after our discussion on where I'm at with the PhD dissertation, I asked him, I was like, okay, so you're teaching, and he's teaching like entry level classes now this year, in addition to some at the PhD level. And I'm like, okay, so what are you seeing as far as AI usage? How is Liberty University, which he works for, trying to counter that and prevent that? What software they're using? What are some tells? I was just very curious. And so we had a pretty lengthy discussion that equaled our mentoring session, all on AI. He uses it every day. All of his colleagues use it every day. And now at the university level, even in disciplines which you wouldn't normally think of a natural use for AI, they basically have a module in all of their classes that teaches them how to use AI in an ethical way in that specific subject field, which is like, I don't know if that's going to work or not, but it's great that they're doing that rather than just saying, don't cheat.
Yeah, I mean, there's so many diverse use cases you talked about. As someone says right here, in 2022, I was amazed. Now I get mad at the models for not being good enough. I mean, we are going to expect these models to be better and better and better. Apple has not really unveiled a serious Siri powered by AI. That's going to have 2 billion people eventually using it, hopefully over the coming years, powered by Gemini. Google has 450 million monthly active users on Gemini. That was 90 days ago. That number is probably higher. Anthropic 5x their revenues from 1 billion to 5 billion. I mean, like, it doesn't feel, to your point, Tanner, the question is do you think it's slowing down? It just feels like it's continuing to accelerate. Now the models have to keep getting better and grabbing our attention to do like cool things, like when ChatGPT had the Ghibli moment and all that. Like, we've got to have more of those, but I don't think it's stopping anytime soon. I mean, when Robinhood Cortex comes out and creates an entire AI research tool, I'm going to be using that like 10 times a day. I can just imagine myself being stuck there looking for stocks based on different prompts. So I think it's only going to accelerate.
Well, yeah. That's sort of the exciting part, right? Is that now I actually do think that we're going to start seeing these products, not just in a chatbot, but in an actual application layer, like Cortex, for example, where it becomes much more useful to use than just asking it questions. You want it to do something. And that, like, agentic AI is going to be, large step changes or what's orders of magnitude? Thank you. Larger than generative AI. And that's what I'm really excited about, as well as being actually able to use these products, not just ask it questions. So super excited. But yeah.
All right. So we're all bullish. Dude, we're sipping the Kool-Aid on the AI revolution. There's a lot of people on FinTwit that have definitively claimed this is the top. It's all a bubble. It's all going to shit. I mean, the amount of tweets I see a day, which lets me know there is some good skepticism that this is all going to crash and burn. We're on the opposite side, and one of us is going to be right.
Yeah.
Yep.
And there is froth, there is speculation, and there are times when the market gets it wrong both ways on stocks, that it way overhypes something that's too far away or just treats it as dead in the water, and it's not. But yeah, AI, it's absolutely got right. Things can shift around as far as who's the leader. There's a lot of, I saw in the comments, a lot of people thinking in the same direction too, of like massive needs for power, a lot of needs, like on the back end. Vertiv was one of those that somebody mentioned as well. So a lot of ways to play it. But I mean, like, it just pays to be bullish, especially when there's something real and tangible like this. And those that, are saying that this is a bubble are only doing it for the most part based on the valuation. if you're making a bearish argument on valuation only, that's a really weak argument. Now, should we consider and listen to that a little bit? Maybe, but for this to really be a bubble, there has to be there shouldn't be revenue that's ramping dramatically. You shouldn't see the growth that you do in these large cap tech stocks. You shouldn't see nearly the demand of what Palantir is experiencing. You shouldn't see crushing demand as it relates to power. This is a massive wave. It's not a bubble. There are bubbles in the market here or there, but it's not like the .com bubble at all. That's a bad correlation there.
Yeah, Nvidia is nowhere near the multiple that Cisco was at, for example. Dude, yeah, we are. I don't know. I don't think we're in a bubble. People have been saying we're in a bubble when Nvidia passed $1 trillion. I mean, there's a conversation with me and Steve where he's saying about how stupidly priced Nvidia is. Sorry to Steve, I love him, but we've all been wrong along the journey. Okay, and it's just all way bigger than we think it is, including myself. I actually think I'm not guessing big enough right now because I'm not, full port. But
yeah.
I also do think, dude, we get there's no benefit for us to be on the side of it's not a bubble and then it ends up being a bubble. I think all three of us, everyone in the chat, would love to know if it's actually a bubble definitively.
Yes.
We would like to know that. There's no amount of personal gains you can get from hyping up the bubble. We all have money invested in these. We would love to get the hell out if it's a bubble, but
yeah, I don't have a fund. I'm not looking for your capital. I'm just saying my opinion.
Yeah. And I try to, basically still man the bear argument on every single position that I have. And even the best of companies. And I think Palantir here is one of the best companies in the world. I really do. You can find, it's hard, but you can find some weakness. Nvidia, you can as well. It's not all geopolitical. So it's worth, breaking out of the echo chamber and listening to the other side. But when it's oh, the valuation's really high and it grew really fast, it's yeah, that's not really a bubble, guys. That's not how it works.
You guys aren't entitled to any of that money. It's all mine. I'm not, it's just donations. Yeah.
You have a community fund, bro. You're managing professional capital, dude.
I'm not. You guys are telling me what to put it in. It's just a donation.
It doesn't matter. It is the capital that you manage at this point.
By the way, we just broke green, so congratulations.
Yay.
There you go. All right. I think that's it for us. We'll be back next Monday, and we'll keep going from there. Real quick before we end out, have you guys seen this 1978 classic Animal House by any chance?
No, I heard.
Yes, you've seen it, Roy?
I have. Watch Lord of the Rings, bro. I don't know what's wrong with you.
I'm just asking because it's a good
movie. People will probably hate this, but I don't know. I wouldn't watch it again. That was when I was younger. So
you're not going on Dan Ives' contacts list.
Dan, have you watched it? I'm just asking a simple.
No.
You haven't watched Animal House?
Neither of you. I saw the whole thing. I listened to you.
You've got issues. How have you not watched this classic film, dude?
A lot of people love it, and I just no. It's not my style.
Yeah, I would consider Tanner you taking a couple hours and watching that movie.
Yeah, okay, everybody.
Good movie, dude. It's a great.
Yeah, happy birthday.
Great film.
All right, let's wrap, bro.
Why are you so quick to leave, bro?
Because you've got me in the mood because you said, okay, guys. But I know you sign off. Your sign-offs take 30 minutes. And the first time you told me, I've just got comfortable and I'm like, okay, we're going. And now you're keeping me here.
I'm not kidding. You can leave if you want. You're right now. You can
1,500 people hostage or something like this.
No. 1,500 people care to listen to you, and you're ready to just leave them high and dry and go to the sauna. I mean, it's anyway. All right, that's pretty much it. Thank you, everybody. Appreciate it. Love you all. We'll be back next Monday. We didn't talk BM&R, but all three of us, I think, are pretty damn bullish on it. So
yes, how about more?
Yeah. all rests on ETH doing well. As long as that doesn't tank, it's okay. But I think it's kind of healthy that it's down 10% because ETH's down 3%, so or 5%.
Yeah.
So it makes sense.
Yeah.
That Bitcoin.
The volatility is a friend of that stock. So
Yeah. All right. Thank you, everybody. Appreciate it. We will see you guys next Monday. Bye, everyone.
Thanks, guys.